Hello and welcome to World Talks on TVP World. I'm your host, Maciej, Wilowski, coming to you from the European Economic Congress here in Katowice. Now, I'm joined today by Krzysztof Dresler, who is the Vice President of the Management Board at PKO BP, which is the largest bank in Poland by assets. Krzysztof, pleasure to have you here.
Hello, hi.
So we see, Mr. Dresler, that of course the biggest situation that's on everybody's minds over the past 2 months globally is the war in Iran and the energy crisis that it has sparked with the blockade of Hormuz and all the energy disruptions taking place. Give us a short assessment of how this has impacted the Polish economy. Have we fared better than expected, about the same compared to other countries?
Actually, our base case scenario is that this conflict will end up to the end of the second quarter. We have a well-diversified economy comparing to our peers. After implementing tariffs, there was a prepared and special index of resilience, and the three countries were in the first three positions. The most resilient. We as Poland, Australia and Emirates, as I remember. From this perspective, we are quite resilient, but of course there is an impact, especially from inflation side. And we revised the GDP growth for the year from 3.7, which was previously forecasted, to 3.5 now. And that was driven by this especially change of inflation, and we observe some negative correlation between lending activity if we observe a bit higher interest rates. In this scenario, we do not expect a change of interest rates at central bank in Poland, but the market rate is a reference rate for lending to corporate side or mortgages. From this perspective, we can have a slight decrease of volumes versus that what was forecasted, but still we have an assumption that European Union flows will support this investment wave, and investment contribution to GDP should be double-digit, 12% at least. That's our forecast. Altogether, in our forecast, we have the loan growth forecasted by 7+%, but we can find banks on the market who are forecasting also a high single digit, higher than we, or small double digit. Situation, relatively speaking, is not very bad for us. 20 bips still is an impact, but this range 3.5, 3.7, we can say that is a scanning range for the right number, and the GDP growth for globally should go down based on IMF forecast by 30 bips to 3.1%. In this scenario that we will see the end of conflict soon, up to the end of second quarter.
And just to clarify for the audience, 20 bips, that translates to 0.2 percentage points. So when we have a decline from 3.7 to 3.5, many economists, financiers tend to say bips as sort of like a slang term. Okay, so moving on. We understand that the Polish economy may be faring better than expected, at least so far. But how long would this crisis have to last for the situation to truly become concerning, at least from the standpoint of consumer confidence, consumers dialing back on spending, and GDP, of course, being impacted negatively that way?
Actually, let me answer this question a bit differently. We have, our firms have some reserves to adapt to a situation. We are less dependent directly on fossil fuels from this region. We are much more diversified now, but generally speaking, if the situation continues in the second half of the year, the negative impact of GDP we will see deeper than this 20 beeps from different directions. This acceleration we observe now on the lending activity will probably go down. We will see lighter dynamics this year, and of course this investment activity. It's last year of the usage of a resilient and the recovery fund, and from this perspective, it's this money we can invest only this year as the economy, but it's a part of the wider financial scheme. From this perspective, if there is a risk, companies often wait with decisions. From this perspective, this potential positive impact we will see in the longer run if we see this continuation. But it's not the base case scenario, as I said. For us, now financial market tells us that they also take a bet at the end of second quarter, this should be over.
So moving on to your institution, PKO BP, we had mentioned before that your bank is the biggest in Poland in terms of assets, and also, of course, a homegrown Polish bank with a long history in Poland. I understand that your bank has quite ambitious expansion prospects, especially when it comes to international markets. Can you detail a little bit more about that?
Yes, of course. In the strategy we defined a pillar to extend our activity abroad. We open foreign branches dedicated to servicing our corporate clients. The strategy is quite simple. First, to follow our clients who are extending operations abroad with financial operations, and we can support locally in countries. And the second step is simply to build and to learn a local market, to build an expertise locally and provide financing to local players, to be a bit more diversified. And the 80% of the export is towards countries in European Union. That's why the natural selection for us are countries from European Union basket, and that's why we open branches here, branches and rep offices. And that's a natural way to learn how to become a global institution. We have to build expertise, we have to talk to people in different languages. It's a new, because we are very local, as you said, over 100 years, the largest bank, huge legacy on retail, the best franchise, but still local. That's this first step. We 21 years ago, we prepared this initial public offer, and we are a listed company. Now 70% of our stocks are free float in private hands, 30% stake is in state-owned hands. The Ministry of State Assets keeps this stake. From this perspective, we have the knowledge and we have understanding, because we are quite in close relations to investors internationally on both sides, equity sides and debt side. But this lending activity is a different story, because even if we open only a branch using this European pass, in fact we have to be comply and align our activity to the minimum requirement in this country. We are open services. From this perspective, small branch, but plenty of requirements. That's why we simply learn how to become a global institution. That's the first step, for sure.
So we know that acquisitions, mergers and acquisitions, are a time-tested way for banks to really expand their offerings abroad. We actually see that in the Polish market with Erste, an Austrian bank, taking over Santander's Polish operations. Has PKO BP explored that option as a way of expanding abroad?
Actually, we have to, being the largest bank in this part of Europe, we have to analyze everything. And we have a professional team who is analyzing different options, what means if we take over something, what means if our competitors take over something in terms of market share and the position. Scale matters, and we named the strategy number one and full stop. From this perspective is not irrelevant for us whether we buy or not buy, but we have to analyze. For us, natural choice now is the organic growth. We can add to the balance sheet annually up to 50 billion zlotys, what is roughly speaking 10% of our assets. From this perspective, still we have gaps towards normalized market share in local market in Poland, and we gain market share now, and we keep this momentum, and we can really attract our clients. We consolidate our clients on the lending activity, cash loans, housing book. We grow market share on corporate side, and we continue that, and that's the best option. And I believe that shareholders simply expect us to continue this story because it creates value for them. But of course, if we are in the position that we saturate, that this option is saturated, we have to be ready to extend our activity in areas where we can add growth. From this perspective, of course, we have to analyze different things, not only banking sector, but fintechs, some companies who are in our group, product manufacturers. That's also a logic for us to add something to the group, to be more innovative to our clients, to increase the quality and value added for our clients. But the first option now is organic growth, but again, we have to analyze everything, and we learn how to become a global institution having this international presence.
As a final question, because we were just talking about the international dimension, but how does the bank see its future within Poland? Is there still room for growth in attracting new clients in Poland and in the bank's home market?
Yeah, as I said, we increased market shares in each key segments last year, and we continue this success story. Our appetite is still to grow. In the strategy we defined some KPIs and milestones and appetite targets, everything connected with this market share and profitability and financial parameters. And from this perspective, again, we see potential to grow locally. We will diversify our activity abroad, first to follow our clients, then to add some expertise to be ready to finance local clients in places we have activity. But the answer is absolutely yes, that we can continue this success story to grow the market share.
Well, Mr. Dresler, it was a pleasure to speak with you today. Thank you so much for being with us, and thank you for your insights and your responses. Thank you so much.
Thank you.
So reporting from the European Economic Congress here in Katowice, this was Maciej Wilowski, and please stay tuned for more on GVP World.